Dave, Milton, mate, good to see you.
Thanks, Mike. Good to be here.
Yeah, mate. So the market, we're obviously here in Melbourne for the Sunkin launch, the project in Highett. You're taking a minute to kind of have a chat to us. You know, what's the difference between the market last year and the market this year?
Well, the market's coming back this year.
Let's
That's the
go.
big difference. No, I think everyone tends to judge the market. What's happened over COVID, now we're moving out of it. And actually, the beginning of this last year was really quite strong. And then we moved into this increasing interest rate cycle, which just killed it.
Yeah.
And last year, probably the market at the end of this last year was at its worst. Just most recently, the last 4 to 6 weeks, we've started to see a real turnaround. And I'll say that shown by rate of conversion of inspection to inquiry, inspection to sale, we get a lot higher attendance. We've seen a move where most of our inspections were midweek. Now they're moving back to weekends. People are getting back to work.
Right.
And we say anyone that has to travel in Sydney to look at property, they're a real buyer. So
it's interesting you say that. You know, we had our highest number of people viewing projects in April since September 2021. And obviously we've kind of got like an early view on demand, but really no one's making sales from views. We need to know, you know, are people getting into the displays and doing transactions?
It is. We've seen a big pickup in inquiry we've been working with for the last 3 to 6 months. They're now the buyers. We haven't seen a great pickup in inquiry other than our response to our database EDM. So our database is starting to prove a great source of sales again. The higher source and sort of what we think is happening in Sydney is going, in Brisbane it's there now, however it's so expensive to build, there's not the jobs starting. In Melbourne we think it'll start to come. So we think the market's starting to improve. You've got chronically low vacancy rates right across Australia. There's no quick fix on that because supply is actually falling, immigration is increasing greatly, rents are going up, so that's going to bring back investors, and houses are becoming unaffordable. There's more people moving into apartments.
The government's talking about all these kind of properties coming to market, but obviously we were in a massive lull of supply. We've got tons of people coming into the country. The vacancy rate's low. It feels like we're speeding towards a car crash in terms of, you know, not enough houses for people to live in.
Look, all governments make lots of promises, so let's take that off the table. It's up to the private sector, but unfortunately, there hasn't been the demand to fuel off the large-scale off-the-plan projects. They take 2, 3, 4 years to deliver. So we have a major problem coming, and there's just not enough support from government with the way of incentives. There's not enough support in planning, a quicker planning process, and government costs are so expensive in development. So there needs to be major change in government policy if they're going to fast-track new accommodation.
So Dave, when are we likely to see the return of the investor coming back into the market?
Oh, it's starting now. It's starting slowly. The increase in interest rates has had a big impact, but I'll say typically you're selling, projects vary, but 45–50% of your stock is sold to investors. Our sales over the last few years have been 10 to 15%. We're now seeing increased inquiry from investors, and the investor sales we're making are interestingly all investors in projects previously. Right. So they're looking at the market, they're looking at the cycle, and they're saying, I'm buying something now, building costs are going up, rents are going up astronomically, and I'm going to be settling in 2 or 3 years, interest rates will have come back down, property will be much more valuable again and much more in demand, and rents will be much higher. So I'll say the smarter or experienced investors are starting to buy now, and I think that trend will continue. I think one of the things that's going to happen with the changes to the superannuation taxing, where you're being taxed on perceived growth above 3 million and you haven't realised the profit, that's going to influence investors to be buying more property, to be negatively geared. Yep. In the federal budget last night, they said they're increasing depreciation from 2.5% to 4%. That's a huge benefit for investors. So I think there's going to be I think they're not going to surge back like we've had, but the smart investors are going to be starting to buy now, and that market will get stronger and stronger.
I think people sitting on the sidelines thinking, oh, you know, building costs are going to come back down. History would suggest building costs don't come back down.
I was in a meeting yesterday with one of our regular clients who is a builder developer, and it's not just material costs, it's council costs, it's labour costs, it's delivery costs. There's so many additional costs that are being imposed on builders. So they might level out, but they're not coming back.
So Dave, if CBRE is known for anything, it's really nailing the very large scale tower projects. You know, how do you guys get them off to a good start? Because when we see them, a lot of it seems to be sold. And I know Highett, you've kind of had a come out of the gate strong. It's been a great start. Yeah. But how do you guys think about that and how do you get it done?
Well, I think it starts at the beginning with really good planning. I mean, most of our clients we work with in the first stage when they buy the site, and you look at who's going to be the end user and get very much involved in the right design, right mix, right product, right level of finishes, so that the product you're bringing to market, you're not reliant on an offshore market or a market that if something changes isn't there. So I think it's all about the planning, and the next stage is we get that planning right, is the positioning of it, that you're targeting the right audience, and then the way quality of marketing material and the quality of your display, that you're showing the product in its best light and what it's going to be. So I think many stages, but planning's the first thing. If you can build a great building, but if it's not planned right, I think you sell at a discount to get sales.
And are you able to share any kind of the early results and at the Highett project with Sunkin?
Oh, you've got to a great start there tonight. I'm off to a function tonight. We're about 70 sales so far. About half of those are unconditional. So we're tracking very well there. We're going to have our public opening in the next 2 weeks, or official launch, and we've had an enormous amount of local inquiry. So we're expecting really good results. And I wouldn't say that I know Melbourne as well, anywhere near like I know Sydney, but it seems this market has been much slower, and this project might be one that leads the way, that sort of shows a return to off-the-plan sales.
Yeah, I mean, we've been working with Scott Jessup, who's obviously the sales and marketing man there, and we're partnered up on the project. Excited to deliver.
Product, right on the park.
Same team as well. You've got an experienced guy in the lead. You've got CBRE. Obviously, we're playing a small role, which we're pleased to do.
Very pleased
and we're going to take it to market and give it a good crack. But the key to getting these developments off the ground is early sales, and certainly you guys have been able to deliver again.
And those early sales give confidence to other buyers making the decision. And you look at the uniqueness of that project, the parkland it sits within, its convenience to it's a beautiful retail village, it's right on the station, and you go look at the surrounding suburbs and you're paying 70-80% more in value. So it's got to be a project, you'd say, it's an emerging suburb, and it's the best project within that space.
I think the key kind of opportunity within that development, we were looking actually before today, because I'm doing a little presentation this evening, and one of the things we saw is that there's a tremendous amount of demand in the Brighton market. There's obviously a bit of product there, but we have a better price point in Highett. We've also got the Hampton market, which is a highly searched for suburb as well. So it's really our job to put those projects and put Highett in front of the buyer, the Brighton buyer or the Hampton buyer, and then the CBRE job to make the conversion.
There's a lot of those buyers priced out of those markets, but they want to live near those areas. They want, 4 kilometres of the beach. It's a sort of, I'd say, an overlooked suburb, the way I see it from Sydney. I'm not, as I say, I don't profess to know Melbourne that well, but when you look at it and you look at the location and how close it is to great amenity, great beach, back to the city on the train, the convenience it offers, it seems a very undervalued suburb.
I think Bayside in general, where it's got the proximity to the beach, I think people kind of really value that, particularly after the experience of COVID. And I think we're going to continue to see more and more demand for that Bayside area. And while there's a bit of stock on market right now, there's not a lot coming through planning. And I think that's where the opportunity is.
It's not about planning. The Sunkin are moving ahead with the development. They've got the funding in place, like this development's happening. So It's not a case that a buyer's buying in and say, when's it going to start? When are the pre-sales going to be achieved? Fortunately, they have the capacity to move ahead. And I think that's the critical or very important point, because it gives buyers a lot of confidence buying, knowing their home's going to be delivered.